It's going to be one of those busy days. If the Reserve Bank isn't enough to keep us busy, we've also got the Fonterra Global Dairy Trade Auction to have a look at. And as well as that, we've got the Bank of Japan have been intervening in the foreign exchange market. So it's a very interesting time indeed. Starting with the Reserve Bank, they've decided to hold the official cash rate as expected. And in the wake of that, we've seen interest rates fall slightly, and the New Zealand dollar is looking a little bit weaker than what it has been over the last couple of days. We're trading just below 73 cents against the US dollar, and we're now down below 78 cents against the Australian dollar. And that's what we'd expect, given the Reserve Bank has really toned down their assessment of where the economy's at. The Reserve Bank released a full set of forecasts in June, and now we get a reassessment, and everything looks a little bit softer since that June update. The household sector is looking fairly subdued, and there's a little bit of a question mark over the global recovery. Certainly the data out of the States has been a little bit soft. There's been some softness in commodity prices as well. So it was pleasing last night to see the Global Dairy Trade Auction produce another good set of results. Prices only lifted around 1.9%, which doesn't seem like much, but to me that's a good result, building on the hefty gains we saw in the auction a fortnight ago. So dairy prices are looking pretty reasonable, and other commodity export prices look like they're going reasonably well also. Probably the biggest thing that's happening in financial markets at the moment is the Bank of Japan. They're intervening in the foreign exchange market for the first time in 6 years, and they're doing it for the exact same reason that our central bank has done it in the past, and that is when the exchange rate is very strong, it starts to have a negative impact on your export sector. And the yen's at 15-year highs, and now they've put a line in the sand, and they're trying to weaken that yen. They did it yesterday, and I'm sure they'll continue to intervene in the currency markets, trying to keep that yen down over the coming weeks.